Hello and welcome to another update video about Ethereum. On the Ethereum chart, we should take a look at the longer time frame chart first, then we take a look at the smaller time frame. Here, nothing really changed, but it's important to understand where we are, what the risks are, and that we're now in a support region. Just we are waiting to see if the market can generate an upside reversal to rally in wave 5. So where are we positioned here? Current idea is that a wave 4 bottomed here in 22. So that's the bear market low. And then we're now in a wave 5. The problem already started back in March. You might remember that when the price retraced a little bit too low here. I think it was, or it was in April or May. I think it was April actually, end of April, when the price retraced a little bit too much for considering this move up an impulse. So it already indicated back then we might be in a diagonal pattern, and it confirmed that further. I think it was in July or so. But yeah, it's a diagonal pattern to the upside, and that would indicate we're in wave 5 indeed. That's one idea I have. The problem with these diagonal patterns is they fail often. They have a high failure rate, right? They have a high failure rate. That's all I can say really. As long as support levels are holding, the white wave count is valid, but below 1790 USD, a more bearish interpretation will become primary. But as long as we're holding 1790, the white count is considered preferred interpretation. I have to say though that a break below the 5th of August low, if sustained, will already make the yellow count, which is more bearish, more likely. The reason is that any break below the 50% retracement is, even if it's in a diagonal, indicates weakness. In addition to that, we would break below this trend line on the long-term chart. So that wouldn't be bullish. So therefore, I'm just watching, waiting to see if the market can generate a reversal here. Ethereum has been weak. The other problem is that the third wave was quite weak. It's been quite a weak third wave. It's valid, but it's still quite a weak third wave. If we look at the FIB extensions, a typical third wave, I mean, again, it's valid, but it reached only like the area between the 1.38 and the 1.618 extension. Yeah, I always say that they should do that. That's fine. But it's still, you know, for a third wave in crypto, I mean, it's still kind of, yeah, it's not great. And then normally what we see in a pullback then is that they test the 78.6 extension to the 100% extension. It's done that. I mean, it's following FIB guidelines. It's just that so far I haven't seen any convincing move up in wave 5 yet. And looking at the bigger picture, the wave 5 really technically only needs to reach 4,790 to stretch a little higher than the third wave and this third wave. But that would be quite weak for an overall fifth wave. So the risk is we only get there. For a more healthy wave 5, I would prefer 5,700 or even 7,880. But this is the situation. So what would happen if we break below 1,790? It could either be that a larger wave 4 is still unfolding and we're just forming here an A, B, C flat correction. In this case, we might test the area of the June 22 low or even a bit lower. And then the bull market could start afterwards. However, if in the next pullback we break below upper support but form a higher low still above the June 22 low, it increases the likelihood that a triangle pattern is unfolding A, B, C, D, E. So this triangle could stretch into, I don't know, 2025, 2026. It would be very frustrating. The good news is that ETH would have a chance to outperform Bitcoin in the next bull run then. Or let's rather say the bear market never finished in this scenario, which would be frustrating, but would very much fit to the action that we've seen on many altcoin charts, which wasn't entirely convincing. Don't get me wrong, we had good runners, but still not the price action that we would normally expect from a bull market. But then what did I say throughout the months, right? What did I say in 2023, in 2024? I did say it's not going to be the same environment for altcoins in this bull market as it's been as it was in the last bull market, because this was a third of a third wave, which is typically the most bullish environment you can get. Yeah, or it was the third wave of a fifth wave, sorry. This was the third wave. We're now in a fifth wave. The third wave is bullish. We actually had a more bullish environment even here in 2016, 2017. But yeah, this is just the fifth wave and it's just not the same. And therefore we need to be more picky with altcoins. And yeah, that's come true. It's always difficult to say then, however, which altcoin is going to make it. And it's been extremely challenging for altcoins, as you know. So that's what Elliott wave tells us, right? To be more on the side of caution when we're in a fifth wave, not to expect those parabolic movements, because the parabolic phase typically happens in the third wave. And we had a little bit of that here, but that's it. So yeah, maybe we get another fifth wave, would be good. But if you want another larger bull market, it might be good to hope for the yellow count actually before we go to before we go into the bull market. The journey to that would actually be frustrating. Or if we now make another high, then a large correction, then next bull market. But the problem is what's happening here, right? So that's the question, the main question. Are we holding the orange support region? Looking at the microstructure, this is the 4-hour chart, or let's go to the 1 hour. Not much happening there, not very exciting. So here you see these potentials. Wave 4 already finished, wave 4 still unfolding with support at 1790. We're just ranging at the moment. So I added a resistance area for the yellow count that will send us lower. So as long as we stay below 2,726, the yellow count could play out here. But above 2,726, we could rather be in the white count. It would at least, let's say, make the yellow directly bearish scenario less likely. So that's the resistance area for the weekend. And that's pretty much it. I think that's what we need to watch for. And I also see the potential we're just forming here an internal fourth wave and get one more low before trying to rise again. But yeah, micro price action is pretty unclear. So just a range really, right? So I think the main takeaway on the micro level is that, yeah, I can't rule out another low here, maybe early next week or so. But we can really only watch for higher prices as soon as we get above 2,726, and then it requires a break above that last swing high at 2,815 for further confirmation that we're following the white count. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.